The Sensex and the Nifty are down for the fourth straight week. This is the longest losing streak so far in 2025. 35 out of 50 Nifty stocks are down this week. Barring banks and pharma, all sectors have ended negative. That is, the sectoral indices, they have posted losses. How long will this weakness persist? Are there lower levels in sight, or is the market about to bounce back? What about the triggers ahead? Hello and welcome to this week's edition of Editors Roundtable. I'm Surabhi Upadhyay. With me, as always, Prashant Nair and Nigel D'Souza. Lots to talk about, folks. And today, to help us map through this slightly tiring, grinding market, we have Pankaj Tibrewal joining in. Pankaj, welcome to the show.
Thanks, Surabhi. It's always a pleasure to be on the Editors Roundtable.
Too tired? Like the market? Oh, guys, come on.
I think Pankaj is going to be the energy booster.
No, wait. Let me start off things. Let me just lay the context for the week, and then we'll go ahead if we go to Pankaj. Pankaj, you're set for the weekend or not?
Yes, always. But earnings season is on.
Yeah, earnings season, really, the weekend you appreciate it even more. But Pankaj, I'm just going to do a quick...
Nigel, what context? I just say thanda tha. And I think dude, go on.
Okay, all right. Let's just tell you what went on in the week, and then in fact we'll get Pankaj's view how he's feeling. You know, the Nifty ended at a 1-month low, and the problem was the last trading session of the week was the weakest, because the last tick was close to the low point of the day, and all those averages, 20, 50 DMA, both got broken out on the Nifty itself. And if you just look at that chart, the Nifty ended with a 0.5% cut. The Nifty Bank actually did a relative outperformance, because that held one end up, it was up close to 0.5%. The problem is tech. Tech got sold into, even good numbers got sold into. You know, the street was quibbling about various other factors. There is no big pickup in terms of discretionary spending as well. You know, so that's a bit of an issue out there. So tech was a sore point. And the broader markets, you know, which were holding up actually, individual stocks did well, but there were a lot more losers than winners. And that's why the mid and the small caps were down between 2 to around 3.5%. What's weighing on sentiment? One is there's no positive trigger. The street is searching for some kind of positive trigger. That's not really coming about. Q1 numbers were expected to be subdued. One would say maybe it's a little bit more subdued. Pankaj will tell us about how he's reading the season so far. And India-US trade deal, that's not yet coming about. We're hearing about, you know, various other countries striking deals, but our numbers not yet come. And the FI selling as well does continue. So for the Nifty, the problem is the structures got punctured a little bit, and we'll have to see some kind of a bounce from these levels, because now the 20 DMA, is far away. The 50 DMA as well is far away. And if we don't bounce from here, then the call is maybe we go and test the 200 DMA, which is a good 800 points away from current levels. So that's why it's essential that you see some kind of trigger coming in. For the Nifty Bank, though it outperformed, it broke the 20 DMA on a closing basis. So that's the other one, because the bulls will be counting on the Nifty Bank to bail them out. All in all, a weak trading session, a weak week. India underperformed the globe, and sentiment is a little bit weakish. Pankaj, how are you reading things? What do you make first of the earnings season of all the companies? I'm sure you're going to give us a number. Companies till now that have delivered, what is the number in terms of growth or degrowth, and how do you read it?
So, Nigel, I don't think earnings season has been as bad as what market is projecting it to be. Just to give you some numbers, till yesterday, 118 companies have reported their numbers from the BSE 500 companies. And revenue growth is approximately 7%, and PAT growth is about 13%, which is not bad as far expectation is concerned. But the sectoral trend has been quite mixed, and within sectorals also, we are seeing a bit of a divergence in many companies. So, for example, the good company result, because of a low base and incremental improvements, we have seen in cement. Across the board, cement companies have reported very strong numbers. Even metal companies, because the base was very bad, if you remember, in June and September quarter last year. So metal companies are also looking quite good on the growth front. What has been a mixed bag is IT. I think large companies have struggled, where some of the mid companies have fared well compared to the large cap peers. BFSI again has been a mixed bag, but our sense is that there's 1 or max 2 quarters of pain from a NIM perspective. But coming FY27, I think banking will be a very strong growth area. And just to give you some numbers, just a little bit of digression, that in the last 2 months, which is April, May, which we have the data for, banking system has seen 5.5 lakh crores of deposit accretion, whereas the credit growth has been only 45,000 crores. So because of the interest rate cut, I think deposit accretion has been very, very sharp. And that will start showing in terms of deposit rates coming down, which has been a challenge for the banking industry for the last 3 years. So our sense is, once this NIM pressure goes away in the next 1 or max 2 quarters, you should see banking earnings rebound very strongly from March or early FY27. So banking has been a mixed bag. On consumer, we have seen mixed trends in terms of staple
Yeah.
companies having a tough time, but discretionary actually outperforming, whether it be hotels or some other industry. So I think I'm not very disappointed as of now. It's early days. Another 380 companies still to go. But let's watch out how the earnings season span out. But one thing is very clear, Nigel, Prashant, Surbi, that I think many mid and small cap companies are faring better in terms of earnings growth compared to the large cap peers.
So the 120 companies, revenue growth of 7% and PAT growth of 13%, right?
Yeah. I guess, Pankaj, yeah, okay. So 13, that's a nice stat and a good one, helpful one, that BSE 500, there's 7% top line growth, 13% profit growth, which is not bad actually. So thanks for putting that on the table. I think, Pankaj, the issue is why everybody is feeling glum and tired is that it's not an easy market to make money in. Now you need to go deep down and find the guys who are giving you the good returns, right? No longer the easy, where everybody feels like a king or everybody feels like a queen. You know, on Midcap Earnings, I want to talk to you about Midcap IT specifically. So let me just quickly recap the numbers. Because what's happened is that this is a bit of a new blow, so to speak, for the market. Till now, one could always make the argument that the weakness was restricted to large cap IT, and you had players like Persistent, Coforge, that were doing well. So just a quick recap of what has happened. Look at the cuts in terms of the weekly loss in these stocks. Persistent 6.5%, Coforge about 10%, Hexaware 12%, Emphasis 7%. Mastech has been flat. Now, what have the companies said? Is the market getting too pessimistic, or is it a real issue? I've just picked up some examples. So Persistent, actually, top-line growth 3.3% is better than what most are doing. Their margins were steady. The commentary was very positive, saying that the order book and the pipeline is healthy. They're targeting 19% CAGR growth over the next 2 years. But what was the problem? The market just focused on the hit. And what was the hit? That they've deferred the wage hike. They've called out weak macro environment. So that was Persistent. Coforge, 8% constant currency growth. Promise of 14% EBIT margins by the time you exit this year. But the market is just not in the mood for any misses. The miss here was that adjusted margins in the quarter were weak. And of course, that issue of capital allocation and whether they're putting too much money into building data centers. That became the focal point for the stock. Hexaware, here, of course, there was a issue of growth. Top line growth was below estimates. Margins were under pressure. The company itself has toned down its expectations from the whole year. They're not as optimistic as they were at the start of the year. And they're acknowledging that. Emphasis, only 1% constant currency growth. Clearly not enough to inspire any confidence in the market. And finally, Mastech. The revenue itself is down about 1%. And Mastech actually is one company that's clearly called out the weakness in IT spends, particularly in sectors like, ramp down of a client in healthcare, weakness in retail in particular. And then if you round it off with, of course, Infosys actually was best in class. That top-line growth was better than any of the other large companies at 2.6%. They increased their guidance. It's still only 1 to 3%, but for whatever it is worth, it's up. And even the commentary, they said they're getting good traction across BFSI in North America. They're seeing new possibility of revenue streams in AI. None of that was enough for the market. The stock ends 4% lower. So, Pankaj, is the market's pessimism on all things IT justified?
So, Surbi, if you look at a common thread between any IT company in their commentary was that the macro and the discretionary spend is a challenging one. And things are not improving as far as US is concerned. Having said that, there have been differences in terms of growth between mid and large caps, but the price reaction is more of a result of the price to perfection. So if you look at most of these names which you mentioned, for the last 1 year, they have been one of the top performers in the sector they operate in, which is IT. And the divergence of valuations between them and large cap has been quite startling because of the growth which they have been delivering. So I think a slight miss out maybe on the order book, maybe on growth, or maybe margins to the expectations market was carrying towards the result season, I think is leading to such kind of a correction from a positioning perspective. But if you look at most of the results which you mentioned on the companies, I think structurally they are doing right things. I think sooner or later markets will take cognizance of that, and probably things will come back. So I'm not so worried about the market reaction. I think in a couple of companies the cash flow conversion was almost 100%, which was never the case for many quarters in the past. So I think companies are moving in the right direction as far cash flow conversion is concerned. Maybe markets have reacted maybe up to a weak commentary or some margin miss. That's okay. I think it's more of a positioning and valuation concern rather than anything else.
Yeah, no, absolutely. The other thing which we've not talked about is, which does not, I mean, it's kind of faded in the background, is that we don't have a deal yet with the US. Not that we're desperate for a deal, but it's not at some level, it's not a good feeling, right? Yeah. That it's
Everyone,
like...
No, and the problem was when he was talking about deals, we thought we were going to be top of the pops.
That's what I'm saying. Expectation was that right at the front of the line to get a deal. And the problem is that not that we don't have a deal. That is, of course, I mean, just sentimental. The real thing is what happens on the 1st of August. Is it going to be base tariff of 10%? Is it going to be in that reciprocal, we were at 26.
Yeah.
Will it be 26, which will be imposed? Or will they say, we're still talking?
Yeah.
So there is actually a sort of real uncertainty as well. What is going to happen for those who don't get a deal because they've said it's a hard deadline.
But just a counter for the sake of debate, Prashant, should that be such a big overhang on the market? Because barring textiles and pharma, from a pure market EPS perspective, you don't have so many electronics exports. It's only a few companies. Dixon has just started, for instance. So is it fair to say that this is a justified market overhang?
I'm not saying it's the dominating driver, but I'm saying it's one more thing, it's one more irritant.
Negative,
right? And actually, it is not just about the dollar value, billion-dollar value of the thing, right? It's about, the relationship was being seen as this really, at many levels.
Absolutely.
Defense, trade is one, and that's what you spoke about, but at many layers. And now, and you just hear President Trump, what he said over the last 3-4 days, right? Yeah. At that conversation with David Sachs, he specifically mentioned Indian workers. Right?
Yeah, that was quite scary.
So it's not a great thing.
Yeah, markets don't like uncertainty.
Exactly.
And it's an uncertain event. Yeah. The day he announces that uncertainty is behind us, and the market will choose to look ahead. For the time being, though, on the day-to-day basis, we're wondering, is it this weekend? Is it next?
No, absolutely. And you can always say that he's there for 4 years. 2028, he can't get another term.
Yeah.
But the point is, once you say, for example, tariffs, etc., once they go higher, it's like taxes. Once they go up, they don't come down very easily. You need something to bring them down. Anyway, it's just one more thing which I think, as I said, is a bit of an irritant more than anything else. We'll take a quick break here. Pankaj, of course, is still with us. We've asked him about specific sectors. We come back, we'll ask him what he's really doing in the market, things that he's been buying in his fund. Coming right back. Okay, welcome back. You're with us here on the Editors Roundtable. And Pankaj Tibrewal, of course, has been running us through his views. Pankaj, thanks for staying on. On that US bit, which we were discussing, chatting about here, I mean, I don't know if you have any thoughts, but beyond that, I want to ask you what you are doing in the market, Pankaj. What are you bullish on? What have you been buying? Pankaj, I think you'll have to unmute yourself.
So, Prashant, before moving on to the where does the value lie in the market, I think it's very important to dissect the market into 3 parts: macro, micro, and then valuations. And on the macro side, I think the economy is making a trough, and incrementally, whatever has happened in the last 4-5 months has been super for economy, both on the macro and the fiscal side. And hence, my belief is that whatever on the micro weakness you are seeing, whether it in terms of earnings, high frequency indicator, is a result of the tight policy we ran for the last 18-24 months before January. And whatever good you are seeing, with the lag of next 2-3 quarters, you will start to see on the micro side. And my belief is that Street is underestimating that pickup over maybe December or March quarter. And hence, my belief FY27 earnings can actually surprise on the upside. So my belief is that from here on till the next 6 months, market may be in a consolidating mode. And there you will get an opportunity to pick up your stocks, your sectors at your prices, because volatility is there to stay. And easy money is behind us. That's what we have been discussing for the last many months. I think it is going to be a stock pickers market. Where does the value lie? If you ask me heart in heart, I think the market caps between 6,000-7,000 crores to 30,000 crore is a sweet spot where I'm seeing value emerging, where many companies are sectoral leaders in the sector they operate in, and great leadership, great balance sheet, great cash flows, and valuation looking reasonable compared to many other market cap segments. The second point is I don't think it will be a sectoral biases. I think market is moving towards bottom-up stock picking, and that's what we are seeing within a sector also. That performance of one company versus other is so different, and hence I think rather than wearing a sectoral hat, have a bottom-up approach. What we are seeing is the low-ticket purchases on consumption should do well. And I think there's an opportunity there, whether it's a consumer durable, whether it be value retailing footwear. I think that's where the opportunity will lie from a consumption perspective. And my sense is this Diwali is going to be a good one compared to what Diwalis we have seen in the past 3-4 years. The second, we have been talking about healthcare. Within that, generic pharma plus your CDMO plays, I think results have been very good for domestic as well as CDMO plays, and that continues to see very sharp earnings compounding as you move ahead. And the third phase is the chemical space. I think the chemical space right now, 2-3 results have only been declared. A couple of them have been very strong. And I believe that over the next 12 to 18 months, this segment is likely to make you money. So if any correction happens in good companies where compounding of earnings is there, I think one should look to increase position. That's broadly is there, and financials towards the year end, I think large private sector banks are looking really good, and FY27 could be a very strong growth year for them. That's broadly is the place where I think from a sectoral bias perspective, but still I repeat, between 6,000-7,000 crore market cap to 30,000-35,000 crore market cap, there's a lot of opportunities emerging after a very long period of time. And if you remember, Prashant, when the entire market narrative was sell mid and small, buy large cap in Feb and March, we turned constructive. Since then, I think broader market has done much better than the leading indices. And our views means that from here on for the next 6 months, market will be in a consolidating phase and bottom-up stock picking will be rewarded. Easy money is behind us. I think you have to work really hard at the ground level to pick up your stocks.
All right, Pankaj, every week we get a new deal, and I believe in the next few weeks we're going to hear a few more deals as well. This week, the deal of the week was from the alcohol space. So I know we haven't caught up for a drink for a while. Normally it's coffee, but we could test that as well. But what do you make of this deal? Because you have Tilak Nagar Industries in there. It's had a very rough past. But now they've turned around. They became a net cash company and they're going to bite big. They're looking at a 4,000 crore deal. However, if they're successful in it, then it puts them into another orbit. So from the mid-cap space, that was the stock of the week actually. What do you make of the alcohol theme? And would you look at these smaller names? I recall when Radico Khaitan started running, that ran a good bit. Or would you look at, the larger names, the United Spirits of the world? How do you approach this theme?
So if you look at the alcohol industry globally, they are struggling, okay? Among the entire beverage space, if you look at the stock performance of Pernod, Diageo, all are having a tough time because the per capita drinking between cohort of 18 to 34 globally has been coming down. That's a surprise. People between 18 to 34 are drinking less in US and Europe compared what we have seen in the previous decades. And that's weighing on the profitability and growth of global alcohol companies. But in India's context, I think volume growth is good. And that's why I said, look at a company which you mentioned, which has just bought a brand which is double the turnover of what they are doing today. That's the aspiration of these companies. And if they can turn it around, they move into the large league. but it's a significant acquisition by a very small cap company. And time will suggest whether things have been proved or not. But our preference, I think, is positive on alcohol beverage industries. We have done a lot of detailed work from a ground level perspective. And I think global TAM is very big from an industry perspective. And the white spirit space, which most of them are in, I think will be a decent growth opportunity from an overall perspective in the next 5 to 10 years. So I think whenever market gives you that opportunity, I think we should look at. But valuations today are not so cheap. Let me be very, very upfront with you guys that today valuations are prohibitive because people also know the long runway of growth. So whenever any state subject problem happens, like the way it happened in Maharashtra, for example, I think those will be the opportunity to buy some high quality franchise in this space.
You know, Pankaj, on that point of 18 to 30-year-olds consuming less alcohol, I can just tell you this, that all the hosts on Editors Roundtable are above that age band. So I think that supports your thesis of being very positive on the alcohol sector overall. Well, on that note, I guess it's a cheers, guys. It's time to say goodbye to Pankaj as well. Pankaj, thank you. Thank you so much for joining in.
Pankaj. Thank you.
Thank you. So, well, coffee for Nigel now, right?
Absolutely. Green tea.
Green tea and coffee.
All of 18 to 34.
All right. Well, thank you so much for being with us on this edition of Editors Roundtable. Many thanks for joining in. Stay tuned. Lots more coming up after the break.